This year, the S&P 500 has constantly been making new record highs. The FTSE 100 has also been hovering in high territory, and the FTSE 250 doesn't know where on earth it should be placed. So how does all this news about the stock market affect my £100 a month InvestEngine portfolio? In this video, I'm going to be revealing it all because I do not care what the market is saying. I'm going to be investing £100 per month regardless of the news. If you would like to sign up to InvestEngine, which is my preferred platform for ETF investing, use the link in the description down below. When you sign up and top up your account with £100, you can receive a bonus of up to £50 extra pounds. So my £100 per month portfolio on InvestEngine is actually part of my general investment account. I do have an ISA, but this of course I can't deposit £100 a month in that because I've already maxed out my ISA. So I'm just going to firstly show you my £100 a month portfolio, which consists of these cards here, and then I'll quickly go through my ISA. But again, the returns that I've got on my ISA are completely different from my £100 a month portfolio. So because InvestEngine actually lets you open as many of these cards as you want, it's very easy to separate your gains based on the kind of funds you have. So the first portfolio I'm going to be talking about, I have called the VSA VJN. You can see that the portfolio balance here is £223.41. You can see that my investment return since August of 2022 has been a positive 29.26%, which I'm incredibly happy about. And that is a return of £48.65. You can also, with this button, see my net contributions, and this is essentially the shaded blue line. Anything above that is basically what I'm gaining in addition to whatever I've put in. You can see that back in the day, this wasn't going too well, but having invested for around 2 years now, you can see that most of my investment over that time horizon has gone up. You can see my performance over the past year, which has been really good. So you may be wondering, what funds do I have in here? But of course, it was quite explanatory from the title. So I have two funds here. One is in the Vanguard S&P 500, and the second is also by Vanguard, the FTSE Japan. You can see that individually, the S&P 500 here is up by 23%, and the FTSE Japan is up by a still amazing 18%. What I like also is you also have the dividend tab here. You can see that in total, since investing here, I've received £2.75 in dividends, and soon I am going to be receiving another dividend from these investments. What you can also do is go into the individual holding. You can see the last time I actually invested here was back in January 2023, and since then I have not invested, but the interest that I'm getting since then has been really nice. You can see that this fund has a 1.14% dividend yield, so nothing crazy to write home about, and my average purchase price is £62.68, current price being £76.83, which has very much soared since I bought it. So the FTSE Japan, if we go into that, the last time I bought it was back in November 2022, so it's been a very long time. You can see the dividend yield is quite a bit higher at 1.71%. You can see my average purchase price was £23.64, and now the price is £29.14. I really like the fact that it actually shows you what price point you bought it for. As you can see, I was actually averaging down, and then I stopped investing because of course with this portfolio I have all the choice over what fund I want to invest in. You can also, if you want to find out more of the holdings, so Toyota 5.5% and the regions, but if you want to download InvestEngine, even if you don't invest in anything, you can find out a lot about ETFs through their app, and I think this is one of the best apps to easily find out about holdings, regions and sectors. So the next portfolio card I have is the VSA VJER. So again, I have the S&P 500 by Vanguard and a different fund here, which is the Vanguard Germany All Cap. And although I already have the S&P 500 in that portfolio, you can even add it again. Of course, there'll be some overlap, but it allows you to track separately the performance of different indices. In this portfolio, my balance is £100 and 1 pence. You can see that my total return is 26.02% in the positive. That is a gain of £22 and 38 pence, which is incredibly good. You can see that compared to my net contributions, I'm doing a lot better, especially over the past year. If you go into dividends, I've only been paid £1 and 52 pence. We can go into each individual holding. The last time I invested into this S&P 500 was back in February 2023, and of course since then it has skyrocketed. My average purchase price is £62.94 and currently it is £76.83, giving me a return of 19%. Very happy with that. The other fund I have here is the Vanguard Germany All Cap. You can see the last time I purchased this was in February 2023, so over a year ago. In terms of of dividends, they have a much higher yield at 2.83%. Back in June, I received £1 for that. Average price was £17.90, so I got it for a really good average price, and you can see since then it has gone down a lot but then gone back up. So next I have one of my biggest portfolios, which is called the GSPX. This is actually a single fund, or in the iShares Core S&P 500. Again, you may be wondering, why do I have 3 S&P 500 holdings, and I'll explain that. However, my return here has been astonishing, up by 30.77%. You can see I've started investing in this portfolio in December 2022, so in less than 1.5 years I've received a positive return of 30.77%. That is a return on investment in terms of pounds of £230.26. Dividends I was just paid a few days ago at £7.11. You can see also my dividends are starting to snowball because I'm investing in this one fund. All the dividends are reinvested automatically. I have auto invest actually put on, so as soon as my dividends were paid, within 1 working day they were automatically reinvested, which I'm really happy to see. Not exactly sure why I have 1p left in cash, but usually InvestEngine actually reinvests all of it with a minimum of £1. They even invest odd pennies like £7 and 10 pence. For some reason they didn't take out the 1 pence, I have no idea. But you can see my net contributions over the past year. Since December, the S&P 500 has skyrocketed up. So if I go into the fund, I will explain why I have chosen to invest into the iShares S&P 500. You can see that the total expense ratio is around 20 to 30% higher than the Vanguard S&P 500, and also the dividend yield is a bit lower. However, most importantly, it is a hedged fund. This just means that any currency fluctuations between the pound and the dollar, they're more stabilized. This costs a bit more, but essentially I want to get a more representative tracking of the S&P 500. And because the pound and the dollar have been recently, very volatile against each other, oftentimes you can find out that the UK returns are a lot lower than the US returns. So I actually wanted to minimize this, and essentially that's why I invested into the iShares S&P 500. You can see that my average price was £7.13, and of course the price now is £8.62, which I'm very happy about. Over the past month, the S&P 500 has gone up by at least 2.85% in this index anyway. It has proved to be a very good place to put your money over the past couple of years. However, of course, past performance is not indicative of future returns. So next I have a portfolio called the DAX, and this is just one fund, the Vanguard Germany All Cap again, but separated. You can see that my return on investment here has been 6.29%. That gives me a positive real world gain of £11.65. In terms of dividends, I've received £1.47 in total. If we go into the fund, you can see the last time I invested into this was at the end of 2023, average price of £21.82, but right now it is worth £23.30. So lastly, in my £100 a month portfolio, I have a portfolio called FTSE 250. This is just one fund again. This is the Vanguard FTSE 250. And you can see since investing, which was only back in June of 2023, I am up by 6.65%. That is a return on investment of around £35.68. I've received £10.62 in dividends. And actually the FTSE 250 does have a pretty high dividend yield. You can see that compared to net contributions, I am slightly above, although the return isn't that crazy. Past month up by 1.1%, which I'm really happy about. But again, overall up by only 6.65%. If I go into this fund, you can see I've been buying at all sorts of prices, but the dividend yield is quite high at 3.44%. And you can see it has a total expense ratio of 0.1%. My average purchase price has been actually quite high at £29.11. But again, I don't really look at where the market is heading in this portfolio. I just buy regardless. Currently, the price is around £29.92. But of course, if you know anything about the FTSE 250, it is a very, very volatile market. So we can only really hope long term that this is going to be providing us better returns, because compared to something like the S&P 500, this has been performing so much worse. I have hope, and I do think maybe in the long term, personally, we'll see some returns on the FTSE 250. So essentially, every month, £100 goes into one of these portfolios depending on what I think will be performing best. Instead of investing evenly, I just put £100 into a fund that I think could be undervalued for that time period. And in the long run, this will just add up. And as you can see with all of these portfolios, regardless of what they were, whether they were the UK markets or the Japanese markets or even the German markets, they are all in the longer term up. Long term, there are some implications of investing in a general investment account. Of course, the reason why I do this outside of an ISA is because my ISAs are full and I already have the funds in a separate place to actually fill up my ISA for the next tax year. Going forward, if I'm struggling to fill up my ISA, which could really be the case in the next 2 years as I reduce my income on purpose, any funds that remain here, I can just sell them off and transfer them directly into my stocks and shares ISA for InvestEngine. After April the 6th this year, you can have as many stocks and shares ISAs as you want. For me, this money will go directly into my InvestEngine stocks and shares ISA when the time comes and I can't find any other money to put into them. So I think that's my long-term vision and it makes sense for me. So let's directly go into my stocks and shares ISA for InvestEngine. You can see that my remaining allowance does say it's £20,000. This is because this was an ISA transfer from my old years. I actually don't have any remaining balance left. My ISA is with someone else this year and I've maxed out that. In any case, unfortunately, all my money right now is in cash, and the reason why it is in cash is because, of course, I was looking at a global fund, and it was only recently where when I have my cash, I put them into money market funds. However, you do have to sell your money market fund and then you have to invest in your other fund, which does take more than 1 working day. So I've just left it as cash for now, and I'm going to very soon invest into an all world fund. I've made a video on this exact selection process of what world fund I'm going to go for. So make sure you check that out here. Also, while you're at that, make sure to check out some of my other videos and I'll see you in the next video.